Is our system a financial system currently broken? Let's ask Robert Kiyosaki, the author of the best-selling personal finance book, Rich Dad, Poor Dad. Robert, welcome. Good to have you with us. Do you see the banking system as broken? Are you worried about the safety of your deposits?
I would be, yes. This here is paper. I don't trust it.
And so but not trusting the paper value of paper money is a separate matter from whether the banks are stable and solvent, right?
That's correct, but the whole system is in trouble. My biggest concern is that inflation is now systemic. And when Powell said it's transitory, that was a lie. When Biden took the Keystone XL pipeline offline, oil went from $30 a barrel to $120 a barrel. That was inflation, not the printing of money. And so this thing here became less valuable. And that's my concern.
So, I think inflation is... I went last night and bought milk. It was $7.59 a gallon.
Did you go to King's again?
I did not go to King's. I went to, where was I? Stop and Shop last night. So at any rate, these are high prices, and they are systemic. I take your point there. Is the Fed doing what it can, in your view, or is there a different way to combat inflation?
Well, I would say it's not what the Fed's going to do, what are you going to do? And so I always talk about the 4 Gs that I've been investing in for most of my life. The first G is gold. This is gold, and then this is silver here. And I stay away from the SLVs or the GLDs. I want no counterparty risk. I want the real stiff. The other thing I'm investing is ground. I own apartment houses. I'm glad I'm not in office buildings or commercial real estate. And then gasoline. Gasoline, the greenies hate the thing, but that's how we fly our planes and stuff like this. And then the last one is food. I invest in cattle and food. So I just stay in things that as inflation goes up, gold goes up, real estate goes up, gasoline goes up, and food goes up. So I invest with the inflation, not against it.
Robert, let me ask you about something when you mentioned, owning housing, and this has come up with a lot of people as well. So you have investors wanting to own housing for the, appreciation value. You have others who say, I'm kind of sick of the way this drives up rents or reduces the supply of homes that I could buy, for instance. We look at the trend where this past week it seems like the big banks are going to get bigger despite everything the administration really hopes happens here. Can you just talk about whether these trends, when you say it comes back to us and what we're doing, but are some of the things that you or that the others are doing making it worse for the guy who's just trying to get ahead?
Well, I'm a big advocate for financial education. So in the 1970s, when I got out of the Marine Corps, my rich dad had me take 2 things. I had to learn how to sell because sales equals income. And then I had to learn how to invest in real estate because real estate is debt. So most people say, live debt free. I had to learn to use debt as money. And as you guys know, in 71, Nixon took the dollar off the gold standard and the US dollar became debt. So I do almost everything opposite of what the pundits say. I'm not debt free. I use debt as money to acquire real estate, and that minimizes my taxes. That's what I do.
Do you own equities?
I own equities of companies I've taken public. I've taken 2 companies public, one off the Vancouver Stock Exchange via an IPO, and the second on New York Stock Exchange this summer via an IPO. So
but beyond that, no equity. Beyond that, you don't own equities or equity mutual funds or ETFs.
I don't trust anything that can be printed. I like the hard stuff.
Things.
I am a commodity guy.
Robert, what would your advice be to somebody who might be 30 years old right now, just paid or is trying to pay an eye-watering sum to get into this house, maybe doesn't, and they feel the pinch. Now it looks like the labor market could be turning. What do you do?
Well, real estate's dependent upon jobs, as you know. So I'm a little bit concerned about the number of layoffs coming in the tech industry. So I'd be very careful about jobs. I live in Phoenix, Arizona. That's why Taiwan Semiconductors moved here. So our job market is really strong. So the first thing I say to young people is, I would take a real estate investment course. They don't cost very much.
Even now, with real estate prices where they are, you think that's still the right thing to do?
I love crises because when crises come in, prices are low. For example, after 2008, I borrowed $300 million to buy some of the best real estate in the world at bargain basement prices.
In 2023, real estate prices have pretty much doubled from '08, don't you think?
I think they're coming down also, but I would take classes on real estate before you do it. The reason is real estate is not liquid. See, a stock is liquid. If I buy Apple and I don't like it, I can sell it that night. I buy a house or something, I'm stuck with it for a while. So I highly recommend more liquid the investment, the more you have to be competent and study and have good teachers.
How do you separate the good real estate classes from the scams? And there are a lot of them.
Hey, if you could answer that question.
Yeah.
I always look for the people. I get into fights on YouTube with some of these real estate guys who are promoting what I consider very risky investment strategies, especially in real estate. I'll say it again, real estate is illiquid. This is as liquid as it gets. Stocks are liquid, so you can get in and out. But the moment you go into real estate or you start a business, you're illiquid. Mm-hmm. And so the more illiquid the assets you're investing in, the smarter you've got to be.